Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a failed breakdown attempt below Monday's low, followed by a reversal back up to the 42.5 to 44.5 resistance, where responsive sellers have been active. At this point, heading into the open, our short-term bias continues to be neutral, and we are open to a directional move on either side, either below initial support later in the day, 26 quarter, 28 quarter, or a breakout above 42.5 to 44.5 and this week's high of 46.75. The primary catalyst today is the FOMC announcement, and typically the market will continue to balance within a range heading into the Fed announcement, and then we can get a directional move. We also have the Fed chair press conference at 1:30 p.m. Central Time, and that can also result in some expanded volatility and directional movement. So those are really the two catalysts today. 1 p.m. Central Time is the FOMC announcement. 1:30 p.m. is the press conference, and both can result in directional movement and expanded volatility. Now, in the event of a breakout above 42.5 to 44.5 and this week's high at 46.75, that would mark a break from a 3-day balance, and it could quite easily result in the test of 50.5 to 52.5 and even the recent high at 56 to 58. Now 56.58 is still active and decent resistance until broken, but if we are moving up on high volume and very strong momentum, then there may even be a little more follow through beyond that, and it's going to be really just based on the reaction that we see in the market off the Fed announcement. So that's really the big catalyst today, and the market's probably going to be fairly quiet and balancing within a range ahead of the announcement. So you don't want to be overly active or aggressive in the morning session, and even on the announcement itself, you want to be careful because the first 5 to 10 minutes can be pretty hectic, and then with the press conference at 1:30 Central Time, the 5 to 10 minutes after that can be hectic as well. So you don't want to get caught up in the volatility. You want to make sure that you are managing your risk correctly, and any trades that are being taken have decent reward to risk. So the big thing today is whether we get a breakout above the 42.5 to 44.5 area and 46.75. That could bring 56.58 into play, and the other scenario is that we get a breakdown below initial support, 26 quarter, 28 quarter, below 23.24, and then that can lead to a directional move quite easily into the 11.5 to 13.5, and possibly even 2100 quarter to 2102 quarter. At that point, the range starts to get fairly exhausted, but if you start taking out 2100 quarter, then the zones below would come into play. 95, 97, then the stronger zones at 90, 92, the 84 naked VPOC, 85 half gap, and then the 80 half to 82 half still continues to be a larger time frame area of support. So right now, we know that the market has been in a very balanced state, not just over the last 3 days, but if you really zoom out and look back over the last week to week and a half, you can see that the market has been very range bound. At first, it was ranging in a bigger range, and there was more volatility. Over the last 3 days, we've had volatility contraction. We've been balancing in a smaller range heading into the FOMC announcement, and then that's where we can get some directional movement and a break to one side or the other, either a breakout to the upside above 46.75 or a breakdown and a liquidation move below 26 quarter, 28 quarter. Now, in the event of a breakdown, it's going to be in alignment with the larger time frame structure that started about a week or so ago when we got that big balance breakdown, big trend down day on Friday. So 2 Fridays ago at this point. So if we get a balance breakdown again out of this current developing range, then we know that it's in alignment with that bigger pattern, and there can be some more selling pressure, which could, like I said, easily take you to 11.5 to 13.5, and quite possibly even into 2100 quarter to 02 quarter. On the upside, if you get a breakout, it would still mark a breakout from a 3 to 4 day balance, which can easily take you up to 50 half to 52 half and 56, 58. But beyond that, you do start running into some fairly strong areas of resistance. So 69 to 71 is a very strong area of resistance. You have the big HVN up there at 72, 75. So if you really start to press to the upside, then keep in mind that we are going to be running into some major areas of resistance where sellers can still be active, and we can get some pretty nice responses, rejections, and possibly even a failure. So that's really how the market is set up right now. Neutral bias heading into the day, expecting some balance, and then expecting directional movement after the FOMC announcement. So let's see which side really takes over on the announcement. That's really going to be the key. Until then, be very selective on the trades you take. Be mindful of trade location. And if that means no trades, then that's perfectly fine. But so far we can quite easily pull back off the open to 31.33. That's an area where buyers can still defend as well. And then from there we can just be a bit more range bound. So again, let's just be cautious early in the session, see how the market responds to the Fed, and we'll take it from there.